Let's begin this morning with the latest economic data. April's producer price index shows an increase between March and April, but not as much as we have seen in previous months. It's an indication that inflation might be easing. Also released this morning, the latest jobless claims, the amount of Americans filing for unemployment hit its highest level in 4 months.
So here to discuss is Jeanna Smialek. She's a Federal Reserve and economy reporter for the New York Times. All right, let's get into the numbers. We got this new data. Walk us through what this signals.
Right. I think the combination really signals that the economy is starting to slow down, and it's starting to do that pretty meaningfully. Your viewers at home are probably familiar with the fact that the Federal Reserve has been trying to engineer a slowdown because inflation has been so rapid. We're all familiar with how quickly our grocery costs and childcare and all the various things we pay for have been climbing in price recently. Well, the goal is to slow the economy to sort of tamp that down. And that does seem to be happening. This producer price index data was good news in many ways. It suggested that at least at a wholesale level, we're really starting to see a pullback in price increases. That sort of confirms what we've seen on the consumer side.
Well, let us talk about that because the CPI data came out yesterday. And even we've seen reports over the last few weeks, and all signs are kind of pointing to the same area, a bit of a cooling. And that's good.
Absolutely. Yeah. This is what we're hoping to see. Obviously, I think we're all keeping our fingers crossed and hoping that it's a bit of a cooling and not a lot of a cooling. The danger here is you get a little bit of cool down and that quickly turns into a lot of cool down and we end up in a recession. But at this stage, this is basically going to plan. This is what we were hoping for. We were hoping for a slowdown in price increases. We were hoping for some slowdown in the job market, but not a colossal one. And at this point, that appears to be what we're seeing.
So let's talk about the unemployment numbers, because kind of what has been happening over the last sort of couple of years or so is that, or at least since the Fed has started to try to increase interest rates, is that employment always remains strong, which is good. We want people to have jobs, but as long as people are working and they're making good money, then they have the money to spend on these items, and so inflation does not budge. So what are the latest unemployment numbers?
Yeah, so this is probably the most challenging part of the economy for the Fed, because it is really like threading a very narrow needle, trying to slow the economy down just enough that the job market cools off without throwing a bunch of people out of work. At this stage, we're not threading that needle in the sense that we have not slowed down the job market that much. These numbers this morning suggest that things might be starting to change, but up to this point, unemployment has been hovering at 3.4%, which is a 50-year low, where we have a very, very strong job market out there. There are plentiful job opportunities. And so we were maybe starting to see that change, starting to see a slight pivot away from that, but it hasn't happened so far. And I think the Fed's dream is that you get a situation where you see a little bit of increase in unemployment, a little bit of slowdown in wages, but not some sort of massive spike in the number of people who are unemployed in this country.
So Treasury Secretary Janet Yellen is at Japan's G7 finance meeting this week. The thing about the U.S. is it's a very large economy. And, there's that whole line about, the U.S. sneezes, other people catch a cold, that kind of thing. Should world leaders be concerned about the state of the U.S. economy, particularly as the debt crisis looms?
Yeah, as you just alluded to, they absolutely are and should be, because we are the world's largest economy. When we do things, it causes major problems if those things are bad. And we have the dollar. We have the world's foremost reserve currency. And so anything that imperils the sanctity of that currency really could have big ripple effects for the global economy. And so I think this is something that's very much in the spotlight. I think other countries are sort of asking, as they do every few years when we do this, why does this exist in the United States? Because it's not really a system that exists elsewhere. But I imagine this will remain a big topic on that international stage.
Jeanna Smialek, it's always great talking to you. Thank you so much.
Thank you.